Yo, what's good everybody? Welcome back to another video in the Day Trading Institution. I really hope you guys have been enjoying this course so far and really learning a lot off of it. I have put so much time and energy into this course and really following your guys' feedback. Now, one thing about the course is that we're always going to have continued videos, but in this video, what we're going to be going over today is stop loss and take profit placement. So just a quick overview of what we're going to be talking about is you as a trader, you already have a process of determining where the market is going to be and what you're going to do when the market is in that area. So let's say that price is currently down here at the bottom, headed towards this range. And let's say price is actually pulled back into this area. You as a trader need to determine where you're going to get out if you're wrong and where you're going to get out if you're right before you take the actual trade. So let's say you're like, okay, well, I'm going to make an entry here. Now you have to ask yourself, where is my stop loss and take profit going to go? My stop loss is going to be under this level of support, because if support breaks, I'm going to get out if I'm wrong. And my take profit is going to be at this high, because this is the nearest level of resistance and has the highest probability of actually getting hit. And that's how you simply place your stop loss and your take profit. And again, this needs to be determined before you take a trade, guys. Right now, let's kind of go over some examples here. Right, realistically, there's many ways we could do this. Right, so I'm going to go over stop losses and take profits for fibs, for support and resistance, everything along those lines there. So anyways, when it comes down to actually looking to place a position, I'm trying to figure out how I kind of want to get this done. So anyways, let's say that we have resistance here, right? And it doesn't mean that I'm going to be like giving you actual trade ideas, but let's just say we have resistance here and we as a trader determine, okay, well, all I'm going to wait for is for price to form support. And once support actually forms, wait for my entry candle. And let's just say price came down to here, right? And this is where price is currently trading at. Once you see the engulfing off of resistance, you're going to say, okay, I'm going to enter the market here. My stop loss is going to be under this level of support. And my first take profit is going to be this high up here for 2 times my risk. Why? Let's just leave it at here, right? For 2 times my risk. Now, if price breaks under support, I'm most likely wrong and I'm going to get out anyways. But notice how I'm placing my stop loss under support. You want to literally think about it as, I'm trying to find an example here, right? So I'm going to grab my phone. This is support. My phone is support, right? And you can think about price being a ball. Every time you drop the ball onto support, it's just going to bounce around until either that ball breaks through or bounces up and rejects. So we're placing our stop loss under support to protect our order price again from actually being hit, our stop loss, right? And it's the same thing for resistance, right? So now that we place our stop under support, that is the best area to place it, because support is protecting our stop loss from getting hit. Now, when it comes to our take profit, I'm going to target the nearest level of resistance. Why? Because what could happen is price go up to resistance and either consolidate and break lower, or consolidate and continue higher. It's one of the two, but you want to play it safe. So we're targeting resistance. Why we're also targeting resistance is because resistance, the nearest level of resistance, is going to have the highest probability of actually getting hit. Now, that's one example that we could use. Let's look for another example, right? So on the 4-hour time frame, let's do a fib example. So we should already know where we're going to be placing our stop losses when it comes to taking a position here on fibs, right? Notice the 618. So here we have resistance, right? So if we're going to take a trade here at the 618 and we see price reject the 50 moving average, I'm not trying to put everything too in detail in terms of the confluences, because every trade is situational, but I want to give you guys an ideology where you could place your stop loss on fibs. So let's say I take an engulfing, right? This engulfing here, notice how this engulfing closed under almost at the 50%. My stop loss is going to go a little bit higher than our engulfing, because we want to give price room to breathe. You kind of want to put it not, in between completely the 50% or the 618 and the 100%, but you want to put it a little bit lower. You just want to give price enough room to breathe, right? So I'm going to be placing my stop loss just slightly above the 618. Notice here how it's not too tight, but at the same time, it's not too big, right? So that's going to be my stop loss. Because remember, in a situation with fibs, notice how price came all the way back to the 618 before rejecting and then continuing to go down. If you would have had your stop loss too tight, you could have even possibly been taken out by the spread, depending on the broker you're trading on, right? So if you take a trade off the 618, your stop loss has to be above the 618. Now, let's just say, let's also talk about the targets. The targets always on fibs. Our first target when we trade based off of fibs is going to be our 0. Why? Because this is our nearest level of support. Our second target is going to be this -27. Why? Because it's an extension lower where we may see price consolidate, and you see here we have support. For your more major levels, right, you always want to look left. Looking left will always give you clues on where your stop losses and take profits will be. Then your third take profit could have been here, and your fourth take profit could have been here, right? So then remember, before you enter a trade, you have to verify the risk to reward. Well, if I enter right now, my stop loss is up here and my TP1 is down here, I'm going to gain 3 times my risk. Am I gaining over 2 times my risk? Yes, so I'm going to take the trade. Take profit 2, 4.6, take profit 3, 6.6, and then take profit 4, roughly 8 times our risk on this specific trade, right? So now if you were to take a trade on fibs at the 50% or a little bit under, let's say in engulfing, your stop loss has to go a little bit above the 618, right? Why is this? We want to give price enough room to breathe, because if we have a 50% rejection, most likely we're going to enter somewhere along here, and our take profit's going to be somewhere up here. Let's leave it at, right? Your stop loss should be at least around the 618, right? Or a little bit above, right? Now, if you get stopped out at a 50% and price goes to the 618 and starts to consolidate, no problem. You can make a re-entry. Now, if you take a trade at the 38.20, your stop loss should go a little bit above the 50%. If you're wrong, you get back in. If you're wrong again, you get back in, unless price breaks the 618. But again, we want to wait for the right entry signal itself. Now, there's multiple ways we could take different types of setups. I'm going to look for a potential break and retests so we can actually look for this. So here we have a break and a retest of this zone, right? Notice how price broke above the zone, then came back under and engulfed, right? This is the retest and rejection. Typically with a break and retest, you want to set your stop loss just slightly above where the break and retest actually was, and typically your target is going to be the next level of support. So in this situation here, the next target theoretically would be here, but then you could target your next level of support, right? So if we see, let's just make the example, right? I'm going to make an example here, right? Let's just say we see price break this level of support, come up, and then come all the way back down to support, right? And let's just say our entry is here. Our stop loss is going to be under support, and our take profit is going to be our next level of resistance, which you can see is right up here. Now, let's say price breaks under resistance. Notice how price was consolidating above, held at support, broke support, came back up. It retested our previous level of support, and it held as resistance. Now, let's just say, let's go down to an hour time frame, right? Let's say you would have made your entry somewhere along, let's go down to a 30-minute actually, because I'm not seeing enough detail on how I would normally trade this, right? Let's just say you would have made your entry somewhere along either this area here or this area. You just know your entry is somewhere in this area here. Your stop loss has to go above your entry price, right? Because remember, we want to place your stop loss above resistance. It's the same ideology as placing your stop loss under support. What's protecting our stop loss from getting hit is that level of resistance. So I place my stop loss above resistance after this rejection. That's my entry point, right? Now your take profit is going to be your next level of support. Now, typically you don't want to set a take profit that's super big and a super tight stop loss, right? Because you want to give price enough room to breathe, because it could come all the way down here, retest it, and then continue to go down. So in a situation like this, I would actually put my stop loss above this 50 SMA as well as above resistance. Now notice how price is also above this high here, our stop loss, right? That is our previous lower high point within this hour time frame. So we have a decent enough size stop loss and we have a decent enough size take profit. So that's how we would set our stop loss and our take profit there. Again, right, when it comes down to setting your stop losses and your take profit levels, when you're buying, your stop loss has to be under support. When you're selling, your stop loss has to be above resistance, and your take profit is simply going to be your next level of support and your next level of resistance, right? Now, let's say we're looking for, again, let's give it this situation here. So in this situation here, right, your stop loss would still have to go above resistance no matter what, right? Even though that the trade didn't play out in your favor, if you were to take a trade off of this engulfing here, or maybe even off of this right here, and you set your take profit down here, your stop loss has to go above resistance. Would I put my stop loss above this wick? No, I feel like that's unnecessarily large, but I would definitely place my stop loss above resistance where I feel as if price has enough room to actually fluctuate, right? And then my take profit again is my nearest level of support, right? So now let's give the trade this example here, right? Let's say I'm going to take this trade here. Right, let's go to the daily. On the daily time frame, right, if I make an entry here off of a 4-hour engulfing, right, I'm going to immediately look at my target. Let's say the engulfing's here. I'm going to look at my target. Here's my target. Next level of resistance. I'm going to place my stop loss under the median of this level of support, because I'm giving price enough room to actually breathe, right? I'm giving price enough room to fluctuate, right? Then you could say the same thing along with here, right? If you enter here, and again, the closer you enter to the level of support or the level of resistance, the better risk to reward ratio you're simply going to have, right? But again, this is why we want to be as accurate with our support and our resistance levels, our supply and our demand levels as best as we possibly could, so we can have the best entries possible and benefit the best off of our risk to reward ratios. Now let's actually go to GJ, right? Because I want to show you guys this trade that I took, right? So initially I had taken a buy position somewhere along here, right? Super clean setup, 38.20 rejection, entry was a little bit earlier. My entry was along this area here. My stop loss was a little bit under the 50% and under this low right here. But notice how I'm going to draw this black line. There's support all throughout here. So I'm placing my stop loss under support and under the 50%. But sometimes there's going to be big stop hunts. And that's exactly what happened here. This was a very big stop hunt. Price came down, grabbed liquidity, and immediately rejected. Now, is the trade still valid? Yes. Why? Because all price simply did was come down into the daily support level and grab liquidity. So yes, buys are still very valid. But again, we're in the holiday period, so trading is definitely going to slow down. But I definitely still could look for a buy. What would I do in this situation now? Notice how I have support here, support here, support here. And then notice how price still closed above this red line, right? In a situation like this, if I'm going to take a trade based off a 4-hour, I'm going to enter around here. My stop loss is going to go right under, a little bit under this level of support. Notice the median, right? Price typically struggles passing this area here, right? So my stop loss is going to go under the median of support. And my next target is going to be the next level of resistance, which is right up here. Very clean trade, very clean setup. And what we can also see is price starting to slowly form bullish structure. What I'm expecting is that 3-leg extension to the upside. So Anyways, everybody, just a quick recap. If you're buying, you want your stop loss under support. If you're selling, you want your stop loss above resistance. If you're taking a Fibonacci retracement trade and you enter at the 50%, your stop loss should probably go somewhere above the 61.8. If you're buying at the 61.8, your stop loss should still go above the 61.8. If you're buying at the 38.20%, your stop loss should be going in between the 50% and the 61.8%. Right? So pretty simple setup, pretty simple in terms of stop losses. When it comes to take profits, your take profit should always be the next level of support or the next level of resistance. So if I'm selling, your take profit should be the next level of support. If I'm buying, your take profit should be the next level of resistance. Hopefully everybody understands that video with stop losses and take profits and how you actually place them and the best areas to place them. Again, the best area to place your stop loss at is at an area that's above or under support and resistance. Anyways, guys, it's not something that's too complicated, but I'll speak to everybody in the next video.